Testing. Good afternoon, ladies and gentlemen. Welcome to the annual general meeting of iFAST Corporation Limited. Due to the current COVID-19 restriction measures, the company is conducting this AGM physically with safe distancing measures in place, where the number of attendees are limited. The AGM is also available via live webcast by video or audio dial-in. Thank you for your pre-registration and attendance at this AGM. To the other shareholders attending by live webcast, thank you for your pre-registration and participation at this AGM. As chairman of this meeting, I'd like to acknowledge that you're present at this AGM. During the time when any of us is speaking at this meeting, we will not wear a mask so they can hear us better. The directors and management of the company seated here with me are Mr. Matthias Yao. On my left is a lead independent director. On my far left is Mr. David Leong. He's a group CFO. On my right will be Ms. Chan Lai It. She's a company secretary. Our directors who are seated off stage are over there. The first one here will be Mr. Kok Chi Wai. Next will be Mr. Peter Ng. Then we have Mr. David To. We have Ms. Janice Wu. Next we have Mr. Lim Wee Kian. And last that is present in this room, we have Mr. Dennis Goh Ping Yuen. Our independent director, Mr. Mark Duncan, who is based in Hong Kong, is attending this meeting via live webcast.
Hello.
Mark? Hi, that's Mark over there from Hong Kong. The audit partner, Mr. Hong Cho Ho, Yen Hong, from KPMG LLP, is attending this meeting via live webcast, but a scrutineer from Drew Corp Services Private Limited, Mr. Raymond Lam, is physically present in this AGM. Before we proceed with the business of this AGM, our Director of Corporate Communications, Mr. John Paul Wong, will give a presentation on the group's business update for first quarter of 2021. John Paul.
Thank you, Chong Chun. Good afternoon, ladies and gentlemen. Thank you for joining us at iFAST Corp's first quarter 2021 business update and AGM. My name is Jean Paul. I'm from the corporate communications team at iFAST Corp. In our first Q results, I'll run through the key summary. Section 1, which touches on the financial results, as well as Section 2, which touches on our performance trends. I'll begin with key summary. So the year 2021 started on a strong note for the group. Net profit in first Q 2021 was at a record high of 8.82 million Singapore dollars. This is an increase of 142.5% compared to first Q of last year. This was achieved on the back of a 51.4% year-on-year increase in net revenue, as well as a 43.8% year-on-year increase in our gross revenue. Similar to 2020, what we observe is that the growth in profit was substantially higher than the growth in revenue. This shows the positive operating leverage of the group's business model. Our net inflows of client assets was at a record high in the first Q 2021. It stood at $1.28 billion, and that helped to push our AUA, our assets under administration, to a record high of 16.11 billion Sing dollars as at 31st March, which represents a growth rate of 68.9% year-on-year. Our gross unit trust subscription grew 66.8% year-on-year to a record high of 2.1 billion Sing dollars in first Q 2021. We'll have a slide which shows the trend for the unit trust subscription as well as the net inflows a bit later. iFAST Corp believes that the robust growth that we have seen in recent times has resulted from our past investments in building a strong integrated digital wealth management platform. The company will continue to work hard on various initiatives in all existing markets that we operate in to ensure that our medium to long-term growth prospects will remain strong. Barring unforeseen circumstances, the group expects business performance for full year 2021 to show healthy growth compared to last year. In addition, the group expects to increase its dividend per share in 2021 compared to 2020. For the first interim dividend for first Q 2021, the directors declared a dividend of 1 cent per ordinary share, which is higher than the first interim dividend for first Q 2020 last year, which stood at 0.75 cents per share. In our quarterly results, we always show our trends for the group's assets under administration, or what we call AUA. So it stood at a record high of $16.11 billion as at 31st March 2021. This represents a year-on-year growth rate of 68.9% and a Q-on-Q, quarter-on-quarter growth rate of 11.5%. As you can see, we contrasted the AUA between our B2B business division as well as our B2C FSM1 business division. So the B2B takes up about 67.5% of our group's AUA, with the B2C taking up the remaining 32.5%. We have this net inflows numbers every quarter as well for investors to look into. So last year, 2020, as you can see, we had a record net inflow amount of $3.16 billion. For first Q as well, first Q 2021, the net inflow stood at $1.28 billion, which is a record quarterly net inflows number for us, and that's substantially higher than the $590 million of net inflows for first Q of last year. You can also see the gross unit trust subscription on this slide as well, which also shows that the number for first Q 2021 was substantially higher than the quarter last year. So for first Q 2021, our gross UT subscription stood at 2.2 billion Sing dollars. For the whole of last year was a record high compared to the previous financial years. The gross UT subscription was at $5.6 billion. I'll now move on to the financial results. Zooming in on the first Q numbers specifically. So in terms of gross revenue, as I shared, it's a year-on-year growth rate of 43.8% in first Q 2021. So our gross revenue stood at $55.3 million. Net revenue grew 51.4% year-on-year to $28.5 million. In terms of our operating expenses, it was up 26.8% year-on-year to $19.13 million in first Q. And the net profit for first Q was at a record high of $8.82 million. That's 142% higher than last year. On this slide, we show the results overview for our group for the last four financial years, as well as first Q 2021, just to show the trends. So you can see that last year was a very strong year for the company, and I think the growth momentum has continued in first Q of this year. The business's positive operating leverage can be shown on this slide here, where we show the profit before tax margin for the group based on our net revenue numbers. So if you look at first Q 2021, our PBT margin for the group based on net revenue was at 36.1%, higher than the full year 2020, which was at 29.6%, which in turn was higher than the previous financial years. Looking at our financial indicators on this slide, the main numbers to note was that there's good growth trends in our EBITDA, net cash positions, operating cash flows, as well as our shareholders' equity. Zooming in very specifically into the net cash position. So the total cash and other investments stood at $58.43 million as at 31st March of this year. We don't have any bank loans or borrowings. And on this slide, on the group's operating cash flows, there's a good trend as well. So last year, 2020, we had operating cash flows of $41 million. For first Q this year, the number stood at $12.5 million. We also show the CAPEX or capital expenditure trends for us in the last few financial years. So from 2018 to 2020, roughly in terms of capex, it's been in the region of $10.7 to $12.6 million per year. So for first Q this year, capex is at $2.1 million. In terms of number of issued shares, as of 31st March, we're at $276 million of shares roughly. And the next two slides shows our balance sheet position, our consolidated financial position. So total assets of $253 million. I will not go into the details of the balance sheet. So moving on to the dividend information. So as shared, for the first interim dividend for first Q 2021, the directors declared a dividend of 1 cent per ordinary share, which is higher than the 0.75 cents per ordinary share in first Q 2020. So the ex-dividend date is 18th of May, and the payment date on the 4th of June. I'll move on to the performance trend in section 2. The AUA breakdown as at 31st March by firstly markets, and then secondly by products. So in terms of markets, Singapore is still the largest contributor for our group's AUA. So it takes up about 69% of our group's AUA, followed by Hong Kong at 18%. Malaysia, it's at 9%, and China and India take up the remaining 3.6%. In terms of products, we started off as a unit trust distribution platform in the year 2000. So unit trust continues to be a key contributor in terms of product contribution. So unit trust takes up about 73% of our total AUA. That's followed by the newer products that we have introduced in the last few years, including stocks and ETFs, which takes up about 15% of our group's AUA. And bonds and cash account take up roughly about 5.7% each of the remaining AUA. I'll move on to the net revenue breakdown between our recurring and non-recurring revenue sources. So for last year, 2020, and first Q this year, the recurring net revenue sources stood at about 67% contribution of our total net revenue. And if you look at first Q this year, the revenue contribution from the recurring sources is still higher at roughly about 63.5%, and the remaining 36.5% is from the non-recurring sources. So that's for first Q of this year. Next, just to show the trends in terms of our net revenue as a ratio of average AUA. So last year, because of the contribution from the stockbroking business as well, you can see that the recurring growth rates, the recurring net revenue growth rate was pretty decent, but the non-recurring growth rate for our net revenue was higher. And I think that trend continued into first Q of this year. So in total, the net revenue as a ratio of average AUA, it's roughly about 0.753% for first Q this year, consisting of 0.479% in recurring net revenue and 0.274% for non-recurring net revenue. On this side, we show the recurring and non-recurring net revenue breakdown over the last 4 years and 1 quarter. So as you can see, for first Q this year, our total net revenue grew by 51%. But if you look at the breakdown, the growth rate was higher for non-recurring net revenue. It more than doubled in first Q. And the recurring net revenue grew by almost 30% year on year. Looking at the breakdown for net revenue by our different markets, so it was a strong quarter for all the various markets. There was positive growth, but especially in the markets of Singapore, Malaysia, and China, as you can see on this slide. For this segment, we touch on net revenue divided by the business, the different business segments, essentially B2B and B2C. So for B2B, the net revenue grew by about 30% in first Q year on year. And for B2C, the net revenue grew by about 90% year on year in first Q of 2021. Looking at the P&L by the different geographies, so it was a very strong quarter for our Singapore operation. So the profit for Singapore was up at about 146% year on year to $8.69 million. Malaysia also had a very strong quarter in first Q. So the net profit was up by about 1.5%. Followed by the other markets. Hong Kong was quite flat year on year in terms of the profit trend. All this is the PBT trend before tax expenses. And net profit after tax was up, as mentioned previously, 142% year-on-year. So looking at the P&L again by the different regions, but in terms of the different financial years from 2017 onwards, so you can see the trend. So it was a very strong year last year for the various core markets of Singapore, Hong Kong, Malaysia, and I think the trend has continued into first Q of this year. So you'll note as well that for China, it's a loss-making operation. And for first Q of this year, the loss stood at about $1.4 million. We've shared a little bit more about the number in our announcement this morning to shareholders. So it's up on our SGXNet and on our IR website to explain a little bit about some of the questions that were asked by our shareholders, including on the China operation. So the management team wanted to share that for China operation, there's been good growth momentum in terms of various metrics, whether it's AUA, sales, net revenue, and so on for last year, 2020, and I think that has continued in the first Q of 2021 as well for China, and the losses therefore could actually widen for this year for China compared to last year. Because the emphasis and priority for the team is to actually ensure that the good growth momentum we see in China continues. So looking at the progress of the individual markets quite briefly. So for Singapore, firstly, the net revenue increased by 57% year-on-year. So it was at $19 million in first Q. The growth in net revenue was supported by robust growth rates in AUA, sales, and net inflows for our B2C operation, FSM1, as well as our B2B operation, which services all the various financial advisory companies and other financial institutions. So first Q 2021 was a record quarter for iFAST Singapore in terms of sales and net inflows. Just to zoom in a little bit on one of the business division, which is iFAST Global Markets, which is under B2B. So it's an advisory team within B2B at iFAST. So that saw AUA growth of 144% year-on-year. So it's done very well in the last few quarters. So first Q 2021 saw sales more than double for our B2C operation, FSM1.com. Partly supported by various reasons. One, it's the number of accounts, as we saw, also hit a record high in first Q, as investors continue to find the various services, including the account onboarding and the speed in their ability to trade on FSM1 to be fast and seamless. The other point about FSM1 in more recent times is that we have launched a permanent flat commission rate of 880 Sing dollars for SGX trades in stocks and ETFs, and that's applicable for all clients, irrespective of their investment amount or AUA amounts. So it was something that was introduced by FSM1 Singapore starting from 5th of April this year. On the B2B side, the growth momentum has been good in the last few quarters. The sales from the FA companies and other financial institutions continue to grow strongly. So sales from the B2B division grew 52% Q-on-Q and 127% year-on-year in first quarter. And if we zoom in on IGM, the sales grew strongly as well by 158% year-on-year. So we believe that the growth in B2B business for us will continue as the number of web advisors using our platform continues to grow. iFAST B2B has been onboarding more institutional partners to use our services and our infrastructure. And that provides a more diversified customer base for us as we continue to strengthen the suite of services for them, including fintech solutions. Moving on to Hong Kong. So the net revenue for Hong Kong increased by 8% year-on-year to $5.2 million in first Q. AUA for Hong Kong as well grew by 33% year-on-year to $2.9 billion as of 31st March. There was a bit of an impact by the lower interest rate environment that we've seen over the course of last year as well, and that continues into first Q. So the contribution of net interest income from cash AUA, which has been growing quite nicely for us in the last few quarters, that led to a slower growth rate in net revenue in first Q for our Hong Kong operation. So if we exclude that impact from the interest income that comes from our cash, so the net revenue of Hong Kong actually grew stronger at 18% year-on-year. So both B2B and B2C Hong Kong recorded strong levels of unit trust sales, which we saw on the numbers for unit trust subscriptions earlier on. And the B2B division also achieved yet another record high in terms of stocks and ETFs turnover in first Q, as clients continue to increase their participation in stocks and ETFs listed on the Hong Kong and US exchanges. The other milestone for our B2B business in Hong Kong was the launch of online account opening services integrated with electronic direct debit authorization, something that we already have for our FSM Hong Kong business. So now it's also available on B2B. So that allows clients to sign up and link their Hong Kong bank accounts within minutes. So that's going to help us with the online account process and onboarding further. Moving on to our third market commentary here, which is Malaysia. So net revenue for Malaysia increased by 118% year-on-year to $3.4 million in first Q of this year. So AUA of the Malaysia operation increased by 13% Q-on-Q. The B2C division, FSM1 Malaysia, so it registered record sales in first Q. It also saw very strong account openings. And the number of new accounts opened has more than doubled in first Q compared to fourth Q. So Q-on-Q it more than doubled. And the other milestone for our B2C operation in Malaysia was the onboarding of the Bursa stockbroking service that was in late March, which we have announced to investors as well. And the business there has seen strong numbers in terms of the CDS accounts opened so far by both new clients as well as existing FSM1 clients. And that bodes well in terms of the kind of transaction volume we expect to see from Malaysia. So the team is also actively working on providing our clients in Malaysia access to US and Hong Kong exchanges eventually. So very similar observation for our B2B Malaysia business, very strong business momentum in first Q, and also the plan for our B2B business is to also strengthen the suite of services that we have, including linkage to the Bursa Stock Exchange, as well as other exchanges in the coming quarters. The FinTech Solutions division in Malaysia has also continued to engage with the prospective partners. So that's been a continuing trend that we see from Malaysia, from both the asset management industry as well as government agencies that are looking for digital solutions. So moving on to China, so net revenue for China grew 186% year-on-year to $0.7 million in first Q. The AUA for China continued to grow at a rapid rate. It was Q-on-Q up 39%. And year-on-year, 220% up to a record high level of 1.9 billion RMB, so roughly equivalent to about 384 million Sing dollars as of 31st of March. Recent trends and milestones for our China operation, our iFAST China Private Fund Management Company, iFAST PFM, has launched its first private fund in February of this year. And the fund has been successfully launched with AMAC in China. So the group believes that as iFAST PFM gains strongest track record over time, the AUM will continue to achieve positive growth in time to come as well. I'll wrap up with just a short commentary on our India associate company. So as of 31st March, iFAST Corp holds an effective 39.4% stake in iFAST India. And the AUA for iFAST India increased 23% year-on-year to roughly about 500 million Sing dollars as of 31st March. And one of the trends we've seen is a positive trend in terms of the regulatory changes for India. So iFAST India is also working on new enhancements and services to allow registered investment advisors to consolidate all their direct assets on its platform. And that will help the RIAs to generate new revenue streams, including the various fees. So that's been something we've been talking a little bit about for iFAST India in the last few quarters. So I won't go through section 3, which is on the appendix. So with that, I've ended my presentation, and it's back to Mr. Lim, the chairman. Thank you.
Thank you, JP. So that was a quick update on the latest business performance for the group. The secretary has advised that a quorum is present. Proxies lodged have been checked and found to be in order. We shall commence with the AGM. The annual report for the year ended 31st December 2020, together with the notice of this meeting, have been circulated to the shareholders. If there are no objections from shareholders, the notice dated 1st April 2021, which has been in your hands for the requisite statutory period, shall be taken as read. We have appointed Drew Corp Services Private Limited as our scrutineers for the verification and supervision for the counting of the votes of all such for counting of the votes of all such valid forms submitted by shareholders by the submission deadline of 2 p.m. on 20th April 2021. The scrutineer will also verify the votes cast by shareholders during the AGM. As chairman of the meeting, I exercise my right in the company's constitution to demand for all resolutions put forth at this meeting to be voted by poll, as required by the listing manual. For shareholders voting by appointing the chairman of the meeting as proxy and who submitted the proxy form by the submission deadline of 2 p.m. on 20th April 2021, as chairman of the meeting, I have voted in accordance with their respective instructions to vote for or against or abstain from voting on all the resolutions to be voted on at this AGM. The company has also published its response to substantial questions submitted in advance by shareholders by the SGXNet today before market hours. I'll now invite our company secretary to explain the conduct of the AGM. Naeem?
Thank you. Thank you, Mr. Chairman. Shareholders can exercise live voting by casting their votes in real time for each resolutions tabled at the AGM via the AGM at Convene platform. The real-time two-way interaction provides shareholders the option of interactive video question and answer session with the Board of Directors. Shareholders present physically or by live webcast who had not submitted their proxy forms may cast their votes on the resolutions to be tabled at the AGM using the voting feature available at the AGM at Convene platform during the course of the AGM meeting. Let us watch a presentation on live voting and ask a question via typing or video call.
How to cast your vote. Exit full screen mode to start submitting your vote. On the right side of the video screen, you should see the portion to cast your votes per resolution. Click on Next to see other resolutions and vote accordingly. Should you want to cancel your vote, simply click on Cancel Vote and vote again accordingly. That's how easy it is to cast your vote. How to ask a question. Refer to the bottom of the screen to start asking a question. Choose whether to submit a textual question or queue for a video call. For textual questions, click Type your question. Choose the related resolution before typing. Enter your question in the text box, and then click Submit. Your question will be addressed once the moderator receives it. You can also ask a question through video by choosing Queue for a video call option. When it's your time to ask, the moderator will ask you to start video and unmute. Once your name is called, ask your question. That's how easy it is to ask a question.
If you have any issue with the AGM at Convene platform, please raise your hand and staff from Axios Convene will attend to you. The chairman will propose the motion for all resolutions at this AGM except for Resolution 9 relating to the proposed grant of options to him. Mr. Matthias Yao, the lead independent director, will propose motion for Resolution 9. The chairman will invite shareholders for questions and comments in the sequence of shareholders present at the meeting will be first invited to ask questions, and thereafter followed by shareholders who have queued for video questions. And lastly, if time permits, we will read out and address text questions posted in the Q&A and address them via the AGM at Convene platform. Each shareholder is encouraged to have not more than 3 questions to give opportunity for other shareholders to submit their questions. Where there are substantially similar questions, The company will consolidate such questions. Consequently, not all questions may be individually addressed. The company will endeavor to do our utmost to address all relevant questions. After the allocated time for shareholders to raise their questions, the chairman will give the cue for final voting, after which the live voting will close. The chairman will announce the poll results for each resolution and declare the resolution carried or not carried with the results of your vote displayed on the screen. I now hand over the chairman to continue with the proceedings.
Thank you, Lain. Let's now proceed with the businesses to be transacted at this AGM. The first item on the agenda is to receive and adopt the audited financial statements of the company for the financial year ended 31st December 2020, together with the director's statement and auditor's report thereon. With the permission of shareholders, I will take the auditor's report as read. I propose the motion for the audited financial statements for the financial year ended 31st December 2020, together with the director's statement and auditor's report be hereby received and adopted. We will address questions altogether after all 10 resolutions have been proposed. We shall now proceed to Resolution 2 of this meeting. The next item on the agenda is on the re-election of Mr. Mark Rudolph Duncan, who is retiring pursuant to Regulation 88 of the Constitution of the company. Mr. Mark Duncan has consented to continue in office. Mr. Mark Duncan, if re-elected, will be considered independent for the purposes of Rule 704(8) of the listing manual. I propose that Mr. Mark Duncan be re-elected as a director of the company. We shall now proceed to Resolution 3 of this meeting. The next item on the agenda is on the re-election of Mr. Toh Teng Piao David, who is retiring by rotation pursuant to Regulation 89 of the Constitution of the company. Mr. David Toh has consented to continue in office. Mr. David Toh, if re-elected, will be considered independent for the purposes of Rule 704(8) of the listing manual. I propose that Toh Teng Piao David be re-elected as a director of the company. We shall now proceed to Resolution 4 of this meeting. The next item on the agenda is on the re-election of Ms. Janice Wu, who is retiring by rotation pursuant to Regulation 89 of the Constitution of the company. Ms. Janice Wu Sang Sang has consented to continue in office. Ms. Janice Wu, if re-elected, will remain as non-independent, non-executive director of the company. I propose that Ms. Janice Wu Sang Sang be re-elected as a director of the company. The next item on the agenda is to record the retirement of Mr. Dennis Goh Ping Yuen as a director pursuant to Regulation 89 of the Constitution of the company. Mr. Goh Ping Yuen, upon his retirement at the conclusion of the AGM, shall cease to be a member of the Board Risk Committee. Mr. Dennis Goh's retirement is part of a planned refreshment of the board so that the board can benefit from the expertise and experiences of directors of different background and experiences. The board would like to put on record their heartfelt appreciation and thanks to Mr. Dennis Goh for his invaluable support and contribution to the company in the last 3 years. Your directors have recommended the payment of a tax-exempt final dividend of 1 cent per ordinary share for the financial year ended 31st December 2020. The proposed dividend, if approved at this meeting, will be paid on 17 May 2021 to members registered in the Register of Members up to the close of business at 5 p.m. on 4th of May 2021. I propose that the tax-exempt one-tier final dividend of 1 Singapore cents per ordinary share for the financial year ended 31st December 2020 be approved. We shall now proceed to Resolution 6 of this meeting. Resolution 6 is to approve the payment of directors' fees of $576,531 for the financial year ending 31st December 2021. As disclosed in the 2020 annual report, $441,319 will be paid in cash on a quarterly basis, and $135,212 will be paid by issuance of equivalent shares to the non-executive directors, including the independent directors. The number of shares rounded up to the nearest 100. Subject to your approval, the share awards will be granted to all non-executive directors on 1st May 2021 as part of their directors' fees, subject to vesting conditions of approximately 1/3 of the share awards after 2 years, and the remaining to be vested after 3 years. The number of shares to be awarded will be determined by reference to the average closing price of the shares over 5 consecutive market days prior to the award. I propose that the directors' fees of $576,531 for the financial year ending 31st December 2021 be approved. We shall now proceed to Resolution 7 of this meeting. The next item on the agenda is to reappoint auditors and to authorize your directors to fix their remuneration. KPMG LLP, who are the auditors of the company, have indicated their willingness to accept reappointment. I propose that KPMG LLP be reappointed as auditors of the company and the directors be authorized to fix their remuneration. We shall now proceed to Resolution 8 of this meeting. No notice of any other ordinary business has been received by the Secretary. I shall proceed to deal with the special business of this meeting. Under special business, Resolution 8, shareholders are asked to grant authority to the directors to grant shares in the company. The full text of the motion is set out in the agenda. I propose that authority be given for directors to issue shares in the company. We shall now proceed to Resolution 9 of this meeting. Resolution 9 on the agenda is to propose the grant of options to Lim Chang Chun, that's myself. I now hand over the meeting to Mr. Matthias Yao, who will chair the meeting for Resolution 9.
Thank you, Chairman. Please refer to the full text of the resolution in the agenda explanatory note 7 in the notice of AGM, and it gives the additional information on the proposed grant of options to our Chairman, Mr. Lim Chang Chung. I propose that approval be given for the proposed grant of options to Mr. Lim Chang Chung. May I now return the chair of the meeting to Mr. Lim to continue with the conduct of this meeting.
Thank you, Matthias. We shall now proceed to Resolution 10 of this meeting. Resolution 10 on the agenda is on the proposed renewal of the share buyback mandate. The full text of the motion has been set out in the agenda and appendix to the notice of AGM. I propose the motion for proposed renewal of share buyback mandate. As all resolutions have been proposed, we will now begin the Q&A session. The Q&A session will be conducted in the following sequence, where shareholders present at the meeting will be first invited to ask questions, meaning the people who are here physically, followed by shareholders who have queued for video question, those on a live webcast. And lastly, if time permits, we'll read out and address the text question posted via the AGM at Convene platform. We'll now take questions from shareholders present at this meeting. Please raise your hand if you have any question regarding the resolutions proposed or the company's business, and our staff will come to you with a microphone. Please be reminded to keep your mask on when asking your question. You should also state your full name before asking your question. Any first question? Yes, please.
Hello.
Hi.
My name is Andrew Ang. I'm a shareholder. I have this question on this other investment. It shows the 19.8 million. I just want to, understand exactly what is this investment. That's my first question. I have another question is that looking at the license that you have in China, I can see that the product available show there as unit trust. Can I say that basically this is the only product they are actually able to sell in China? Because if I would look at Singapore, Hong Kong, basically you have stocks, ETF, shares, and I think there are many other products that you can offer, but not China. Even though I think there are a couple of licenses over there that is your license to, but then in terms of product is only unit trust. So my question is that going forward, is this a possibility that you could actually get more license? I'm not too sure what license would that be, where you can actually have the full range of product, because I think China is a very huge market in terms of stocks and ETF, so that could be a huge potential there. Thank you.
Thank you. Okay, the first question regarding the investment, 19.8, I'll ask our CFO to address that. David?
Okay, I believe your other investment, 19.8 million, you are asking for is the balance at the end of March 2021. Anyway, our other investment basically contain the bond, the investment in the bond. We have the Bond Express. So actually all these are investment in bond that will investment in the Bond Express. And also we also remember in long time ago, we still have some IPO proceed that we just put in the proceed into some quoted debt investments such as bond, and also the quoted equity investments such as bond fund, equity fund, stock, etc., and fixed income fund. So these are the nature inside this other investment. Thank you.
Can I ask that whether if there is a dividends or so-called coupons paid out, would that be classified part of the profit, or it is just showing as a floating profit only?
Actually, we received the dividend income from this investment, and I think it's included in under our other income in the note 20 of the 2000 auditor accounts. And also, if you refer back to the Q1 result announcement in page 4, actually we also showing the nature of other income, that including the investment income, and also is the dividend income from all this kind of investment, etc. Yeah. Thank you.
So essentially, just to add on, firstly, these are the surplus capital that we have. So part of it is in bond fund. The other part is really in some of the actual bond, partly for investment and partly to facilitate the bond business that we actually have. Yeah, so that's the nature of it. Your second question that you're asking about China, is it essentially doing only unit trust? The answer is yes, at this point in time, it's essentially unit trust, because at this point in time, that is basically the license that we have. Do we have plans to be able to handle more products? Do we have plans to be able to have more licenses in the future? The answer is yes, when opportunity arises in the future, we would like to pursue those opportunities. Exact timing, we're not sure yet. In a sense, that is actually something that has been seen in the other country as well. If you take Singapore and Hong Kong and Malaysia, we started with unit trust as the initially as the only product, and then as time went on, we added other products onto the platform, because we feel that in order for us to achieve a full potential as a wealth management platform, we ought to go beyond the unit trust. At this point in time in China, we haven't done so yet, but when the opportunity arises, we would wish to pursue those opportunities as well. Yeah. Any further question from the floor? Yes, please.
Hi, hello, this is Yong from Abisa Capital. I have 3 questions. The first one is about the Hong Kong operations. So what AUA of Hong Kong operation was still doing well in first quarter, but revenue and net profit didn't grow in line. So could you tell us what is the reason beside the lower interest rate? Why is Hong Kong market is so weak compared to other market?
Yeah, so if I take the AUA, if you take end of March this year compared to 1 year ago, then I think you're looking at the Hong Kong AUA increasing approximately 40%. But if you take the average the increase in the average AUA for first Q this year versus first Q last year is about 27% growth. Still a decent growth, even though not as strong as what we saw in Singapore and Malaysia. I think in Hong Kong, the B2C business was actually growing quite well, but I think the B2B business for Hong Kong during the past 1 year wasn't as strong, partly also because there was some bond business during the year where there's because of some of the past changes in regulation, then it sort of started to mature, so that reduced the overall growth rate. But nevertheless, I think the actual growth in revenue that you saw seems a lot weaker, and that, as explained, was also due to the fact that interest rates in Hong Kong actually dropped to a very low level. So that affected the fees that we get on the cash account from the cash in Hong Kong.
Okay, thank you. My second question is about the trawler fee. Is there any pressure on your trawler fee, and how is it holding up?
Trailer fee, I would say that we don't see the downward pressure on trailer fee on average. I think the nature of the industry is actually such that over time, if you're a distributor, if you're a distribution platform that has good scale and increasing scale, then in a sense you do have a bit of an upper hand in the negotiation table. If you, that's a function of the fact that there are actually many different fund houses, but in terms of big distributors, there aren't so many. So trailer fee generally holding out well. We don't see the downward pressure on trailer fee. Yeah.
Thank you. And my third question is about losses in China, which were widened in first quarter. What is the guidance for losses in China for the full year, and what is management guidance for the profitability in future?
Okay. Yeah, so I think we get this question a lot about China. I think a lot of shareholders have asked about when we expect to be able to break even in China. Yeah, so I think shareholders are asking for clearer guidance on that. But we're at this point in time in China, we feel that the right thing and important thing for us to do is to ensure that we're able to ensure that we can grow to a much bigger size in terms of our overall China business. We are certainly still very small in China compared to where we can be and where we should be. We're encouraged that in the last 1 year plus, we have seen very good momentum in China. I think that's after seeing a couple of very slow years, the 1-2 years before. So we are encouraged that our strategy that we're putting into China have started to show the fruits. But because the overall scale is still not so big, we want to make sure that the momentum continue, and as such, we're actually continuing to invest in China. And by doing so, we feel that then the potential that we can achieve going forward in the years ahead will be closer to where we think we ought to try to get to. As for the guidance, I think at this point, we would like to say that it is possible that the losses from China will be a bit more in the current financial year than in year 2020. I think that's possible. And we feel that even though there could be some increase in losses, but the overall quantum of the losses relative to the overall group profitability is still manageable. And by ensuring that we're able to keep up the momentum, we think that going forward into the next 1-2 years and beyond, then we start to reap more of the benefit of this investment that we're putting in. So that's how we see the China at this point. So we don't think that the right thing to do is to try to reach profitability straight away this year or next year, but certainly if you look at how we have manage our overall business in the past, we are not a company that just burn money unnecessarily. We invest when we need to, but at the same time, we generally are prudent in how we spend money. Thank you. Any other question from the floor?
Hi, I'm Sudan here, shareholder. I've got 2 questions. First one is with regards to CAPEX. So CAPEX in 2020 was around 13 million. So it's been rising since 2017. Just trying to understand, going forward, will CAPEX taper off? Probably most of the investments has already been done. Going forward, how will CAPEX be? Next question is on the Malaysia Digital Bank license. Is there any timeline for this license going forward? Like, has the application been done, and when will the results be out? And how much capital commitment will the group have for this? Thank you.
Yeah. So regarding your first question, on CAPEX, I think for the we have not guided a specific number for the current year. To a large extent, also because we are awaiting more concrete progress or finalization of the MPF contract in Hong Kong. So ahead of that, I didn't want to pin down a certain specific number. But as far as the existing business are concerned, I would say that one rough way to look at it is CAPEX in the current year could be similar to what it was in the last 1-2 years. That could be one rough way of estimating. But in terms of exact guidance on the CAPEX estimate, then perhaps in the next 1-2 quarters, then we can give a better estimate. Your second question regarding the digital bank license in Malaysia. We are currently in the midst of firming up some detail with some potential partner to apply for the digital bank license in Malaysia. We will be taking the lead we will be taking a lead in the application, but because the license in Malaysia give preference to the consortiums that are majority controlled by Malaysian shareholders, we expect the iFAST Corp's stake will be below 50% for this application. But iFAST Corp is taking a lead in this, and we will be likely to be the biggest shareholder in this Malaysian bank if eventually we're successful. The deadline for application is end of June, so we expect to put in to submit the application sometime in June for the license. After submitting, then we'll have to go through the evaluation process, and it is expected that the results of the application will be known only in early next year. That's where things are currently. I think there was a question also about the capital that's required. I think in Malaysia, unlike Singapore, where they actually divide the license into two categories, the retail and the wholesale license. In Malaysia, it's just one category. It's essentially a retail license. But the good thing is that in terms of capital requirement, is small relative to Singapore. In the first year, the minimum capital that is required will actually be, in the first 3 years, the minimum capital that's required is 100 mil ringgit. If you assume that the consortium put in, say, double that or so, and then you take our share of the capital, then you find that it's an amount that is manageable for us. Yeah. Thank you. Any further question? Yes, there's one.
Hi, good afternoon. Thanks for this AGM. It's really refreshing to have an AGM that can meet management face to face. My name is Andy. I'm a shareholder. So I have a couple of questions. The first question is with regards to business and operations. With the introduction of new players, for example, like Tiger Brokers, Momo, and robo-advisors coming up, some I realized that even offered new share to just open an account to entice investors to open their accounts. Just want to ask management, how is this going to affect iFAST, and how are you responding to this increased competition? That's the first question.
Okay, I'd like to pass this question to John Paul. JP, where are you? Okay, yeah, John Paul is our Director of Corporate Communication, but he's also the GM of FSM Singapore. So yeah, he'll address that.
Yeah, thanks for the question again. So for the competition or the changes in the stockbroking landscape that we have seen in Singapore specifically, in the, let's say, last few months, we've seen the Chinese brokers coming in, and I think in terms of pricing, they are extremely competitive. The impact, in many ways, it's across the whole stockbroking industry, firstly, including iFAST. But for iFAST, we're a relatively new player in the stockbroking scene. We became an SGX trading member about less than 4 years ago. So we'll continue to grow the stockbroking business on top of our existing businesses. For stockbroking specifically, we'll be looking into strengthening some of the services that we provide, not necessarily always looking into the pricing aspect, because that could be a very short-term game that could be painful for a lot of the financial institutions. So we'll be focusing on broadening the services. Pricing is just one aspect. The client services, the kind of ideas we offer to investors, some of the tools we offer to investors on the web and mobile app. So we look at it from a more overall perspective. Very specifically, just now we mentioned also that for SGX trading, this is one exchange where we felt that looking at what we offer, we can afford to actually make the pricing even more attractive And in many ways, it makes us probably the most attractive for SGX trades for quite a number of investors here because of the flat commission rate. So it's something that essentially no brokers have gone into in terms of giving a flat commission rate. So we are offering a 8.8 commission rate on SGX ETFs and stocks for all investors. And in many ways, I think for investors who are used to trading in SGX stocks and ETFs in Singapore, if they can link their CDP account, for example, to our FSM1 account electronically without physical paper work, then that's a very convenient convenient way for them to actually save on the trading costs when they link their account and sell their holdings on their CDP account via FSM1. So the goal for us is to ensure that the services get better over time. Pricing is just one aspect, as I mentioned, but it's also all the other solutions we have in mind. And also back to the group's business and strategies. Stockbroking is a relatively new business for IFAS, and while it has been doing very well, especially for the B2C side in recent times, on the B2B as well, it's also a service that we have added for B2B partners. And another way of looking at this is also that IFAS has always been taking a very long-term approach in terms of working with various financial institutions, empowering them with the services and infrastructure and fintech solutions we have. And in recent times, our B2B business division has seen increased interest from financial institutions like stockbrokers to actually perhaps use our platform as well. So from a wealth management platform perspective for IFAS, it's a little bit different in terms of looking at it very specifically at just stockbroking business, because it's quite a relatively small part of our AUA still today. Yeah. Thank you.
If I may add to this point, just like to highlight that I think IFAS has been around for 20 years in business. The bulk of the initial period, our main product has been a unit trust. And during this period, most of the time, or rather after the first 2 years of our business, we have essentially been a market leader in our business all these years. And as a market leader, you kind of get used to having your competitors coming in to launch services at a lower price. Because that's what always happens. The newer player will come in and they'll try to grab market share using a lower price, which is what we did when we started the stockbroking here as well in Singapore a few years ago. So what I'm trying to say really is that pricing is one consideration. You don't necessarily have to be the lowest, but you need to ensure that you're seen to be the one that offer the best overall value for service. Having said that, we would say that we expect that in certain area, we can actually be the most competitive, such as the pricing for, say, Singapore stocks. But we can't be the lowest on pricing in every area. But more importantly, on an overall basis, we're seen as offering the best value for money. That's the key thing. Is there a second question from Andy?
Yes. Turning to page 143, under associates, we noticed that there are 3 associate companies right now. Just want management to comment about the role of these associates to the group, because I understand that IFAS has an IGM, which is a B2B business arm, and that one of your companies, Provident Holdings Private Limited, is also a B2B FA, if I don't remember wrongly. So could you just comment about the potential synergies, or what's the long-term plan of having a 30% stake in this company, as well as the new associate, Raffles Family Office China Limited? Thanks.
Yeah. So so regarding associate, okay, of the 3, one of them is IFAS India, right? Currently, our stake is effectively 39%. I mean, the direct holding is over 40, but effectively it's about 39. So that in time to come, we expect that to be, well, it's basically in a platform business, so that's part of our overall core business. So that's actually quite self-explanatory. Regarding Provident, that's actually a business that we took a stake in since quite a number of years ago. Provident is actually one of the few companies in a financial advisory industry in Singapore that focus on the fee-based model or fee-only model, and is a business model that we believe in, and we therefore along the way felt that we should provide some support and be a partner, a closer partner if possible, for a business that we believe in the longer term direction. It's true that currently we do have our own in-house division. We call it IGM, iFAST Global Market, that is in a similar business. But in our mind, that is not a major conflict, because if you look at our overall business model of iFAST, we are a B2B platform, and being a B2B platform, we basically work with various businesses, various partners. We may or may not have equity stake in those companies, but the key thing is we, as a platform, we do need to work with various partners. So we're quite used to managing all this potential conflict. So that in itself is not a major problem. As for Raffles Family Office, that is an associate joint venture that we set up with them for China. I think Raffles have some of their strength in a higher net worth segment of the market. So for the China market, we felt that it does make sense for us to actually have this joint venture. Yeah, that's where we are. Any other question from the floor?
Hi, Mr. Chairman. Apologies for the interruption, as we have answered quite a number of questions from the physical attendees, and we are seeing this shareholder, Mr. Lim Kusan. He has been in the queue for quite long for the video question. So may I suggest that we take a few questions from him?
Okay, let's do that. Okay. So let's move on to the questions from audience in a live webcast.
Hello,
yes, yeah, we can hear now. Would you like to proceed with the question?
Yeah, please. I'd like to ask the Chairman, unit holder, David Lim. I'd like to understand, Chairman, can you share with us your views on how the bright spots that we can see of this company in the near future? That's question one. And then second question is, do you have any updates for the Hong Kong joint venture in terms of the potential profitability? And then the next question is, do you have any plans to list in the US or start operation in the US market? And last question is, how can iFAST further improve its profit margins? Thank you.
Okay, it wasn't very clear. Did you catch the?
Yeah, it wasn't very clear. Maybe I can just perhaps rephrase. Was the first question more about the company's long-term prospects in terms of the vision and so on?
What are the bright spots that we can see?
The bright spots, right? Yeah, the bright spots a bit more future-looking in terms of perhaps the company's plans.
Yes.
Yeah.
Okay, perhaps I'll tackle the first question first. Yeah, I think if you look at the updates that we've been providing all this while, we have always mentioned that we are a fintech wealth management platform, and our goal is to grow the overall size of our business, and one of the key measures would be the AUA, assets under administration. Currently, we're present in 5 different markets, and we feel that in all 5 markets, we are still at a stage where there's quite a lot of room for growth. As a wealth management platform, we feel that the size we're at now is actually still quite small relative to the potential. And we will continue to work on improving, increasing the overall scale, and we'll continue to work on improving over the overall range and depth of our services and grow from there. I think along the way, we have also made a statement that we have a vision for 2028 where we hope to be able to achieve an AUA of $100 billion. And in the recent annual report, I mentioned that particular target again, and we are mentioning that we continue to be committed to that particular goal, and yeah, so that formed the overall gist of the mission that the company has set for itself. And of course, all that is also guided by our mission statement, which is essentially to help investors around the world to invest globally and profitably. So the AUA target, etc., and our general rollout services and our investment philosophy, that is essentially in line with this mission statement that we have pinned it down. I think that's the first part of the question. Did you catch a subsequent?
Mr. Lim, I believe you were asking about US plans for US listing, is it?
Yeah. Before that,
Sorry,
in terms of the Hong Kong.
Sorry, the Hong Kong. What?
We cannot hear your
can
second
hear so
question.
clearly. Yeah. Can you repeat your second question?
Yeah, the next question is regarding Hong Kong joint venture business. Can you provide more details in terms of potential profitability?
I'm wondering whether you're referring to the MPF project or what joint venture you're talking about.
Hong Kong joint venture.
It's about Hong Kong, probably prospects as well.
I think you're talking about joint venture. We don't really have too much joint venture in Hong Kong at this point. We do have the potential upcoming project, the MPF project, but as stated previously, I think as of now we're not ready to give the details as yet. We will do so at the appropriate time when more of progress have been in place. I'll just touch quickly on the third part, if I may. If I catch your questions correctly, I think it was regarding US. I'm not sure whether you're referring to the business in US or listing in US.
Listing.
Yeah. We at this point in time we don't have any immediate plan on a separate listing, be it US or other market for iFAST Corp. If we do, then accordingly we will inform shareholders at the right time. But as of now, we don't have such a plan. Yeah.
So we have no more video questions, so we can resume with our questions for the live audience.
Hi, afternoon. Congrats management on delivering another set of stellar results. It's Kwokman here. My question is, Singapore has already witnessed the operation leverage upon achieving a certain critical mass. Could you give investors a sense of when did Singapore achieve that operational leverage and that picked up in profitability? And in terms of the other key markets of Hong Kong, Malaysia, China, India, what is the target in terms of AUA or active trading investors you expect to see on that platform over the next 2 or 3 years?
So regarding the first part of question, when did Singapore achieve the operational leverage? I think it's difficult to pin down one specific year. I would say that we are probably still at a phase whereby even though we are seeing good improvement in terms of the scale and therefore the margin that we're seeing from a Singapore business, I would say that that does not mean that we are already at the optimal level or highest level. So it's not something where we talk about a certain specific point in time. I think the first few years typically will be harder. I think it typically, so Singapore took 5 years before we started generating profit, and then after that we started to turn profitable, and margins then started to be on the uptrend. Is there room for further uptrend? Is possible, and that's something we will try to work towards. As far as the other markets are concerned, they are generally at the stage whereby they're behind Singapore in terms of the scale of the business. So from that perspective, then I think the potential for improving margins would actually be more significant for the other market. So we see ourselves as a wealth management platform. So even for Singapore, if you look at the latest numbers that we have, I think our AUA in Singapore is at 11 billion. 11 billion in the overall wealth management industry in Singapore, I think is still considered small relative to the overall potential of the market. And in the other market, we're at even smaller percentages. So I think as long as we are able to continue to improve on the overall range and the scale on our services, the range and depth of our services, then I think there's a potential for further growth in the other markets that we're in. So yeah, so not one specific year, but I think it's a continuum of improvements that we can potentially see. Thank you.
My second question is, do you foresee iFAST working with other strategic partners with regard to some of your overseas market, vis-a-vis, for example, your bid with PCCW in Hong Kong? I mean, are there strategic partners, not necessarily in the form of PCCW, but that could hasten your path to profitability in the other overseas market?
Yeah. When you say strategic partner, do you mean equity strategic partners?
Could be distributors, could be equity partners, or joint venture in product development, or in a holistic way. Yeah.
Yeah. I think the reality is because we're in a B2B business, then we're always trying to have more partners. I think that's just the nature of the business. We are currently already working with a couple of hundred companies in the 5 markets that we're in, and the list will continue to grow. So I would say that many of these are strategic partner. Most of them are not equity partner, but some will be closer partner than others. Along the way, there will be some that where it's possible that there's some equity relationship, but that's not the most important. I think the key thing is that the overall service that we can provide to each other is complementary. Then we'll continue to extend on that overall list of partners that we have. And I think that that is, so this strategy of building our overall fintech ecosystem, that is basically, in a sense, similar to having more and more partners over time. Is an ongoing effort that will actually continue. The list will continue to increase, and the type of company that we work with also has been on an increase. It used to be more of a financial advisory firm. Along the way, we start to have banks, insurance company, and then in more recent time, there are some internet company with internet distribution capability, and stockbroking firms, etc., or even fund managers. So the type of partners is something that is on the increase and will continue to do so. Thank you. Jiwei, are there a lot of questions on the text or there?
We do have a few This is a question from Benjamin Tan from UBS. He's an analyst. So his question is relating to our company's business and operation. He has a question that's regarding the Chinese business. He wants to understand how is the take-up of the China funds of fund so far, and are there any plans to launch more fund of fund in China in the future, and what are the problem placed so far that has led to that has held back our expansion in China, for example, the distribution of funds.
Yeah. Yeah. So firstly, regarding the fund of fund, is something that we have launched. Whether it's a fund of fund or some kind of discretionary portfolio management services that we provide in different countries, we know that this is a service that typically take a period of time for it to ramp up to a bigger level. So we have launched the service. The actual number in terms of AUM right now is still small relative to the AUM in China and the group, but it's an important part of the service in the long run, and it's something that will grow steadily as we move on. And that is something that is consistent with how we see the rollout of our fund management or discretionary portfolio services in the other country. What are problems faced so far that's held back our expansion in China? I would say that in the first couple of years, the progress for China were relatively slow. I think typically when you go into a new market, while we're clear about the service that we need to provide well for the long run, in the short term, typically there are some aspect of the service that we may not have rolled out in the best possible manner, which in turn then slow down the pace at which we have been able to ramp up. But I think the good thing is that we see that things are quite quickly gaining momentum in the last 1.5 years in China for us, partly because of the continued improvement in the services that we are providing. And the other contributing factor will be the fact that I think the China market used to be a market whereby you saw many different kind of financial products that are different from unit trusts being launched and they are being purchased by consumers in China. Many of these included a lot of the products with an implicit guarantee, which is quite different from the unit trust products that we normally distribute. So in the first few years, that sort of slowed down the overall pace at which we have been able to grow as well. But in the last few years, there's been a very clear push by the government to promote mutual funds, which is basically the core product that we have as a group. So that works in our favor. So that is one important factor together with the continued improvement in the overall service. So we start to see a better momentum in China, and we hope that that will continue as we move on. Okay. At this point, I think we'll perhaps can take 3 last questions before we move on to the voting for the AGM business. Are there any final questions or any question on the text that can
Chairman, Mr. Chairman, we still have a few more questions, textual questions online. So the next question is from Andrea. So she's from CIMB, an analyst, and her question is, I understand that management is expecting 2021 to be a better year in terms of profit. What are your assumptions on growth in terms of region or product for the rest of the year? What is the base case in terms of trading volumes for stocks and ETF on a quarter-on-quarter basis going forward? Has this peaked in first Q 2021?
Yeah. So as a former analyst, I can understand the need to have a very detailed analysis on the quarterly number and yearly number in order to make a more accurate projection. However, I think what we can say really is that perhaps the quarterly changes in terms of trading volume is not something that we can project accurately, and not something that we actually try to put too much weightage on. I think the single most important number for us that we typically watch would perhaps be the net inflow. Net inflow of client assets into the overall platform. So that is a number that we have been that's a number that we have actually been showing every quarter. So for first quarter of this year, we saw that the net inflow of client assets was 1.28 billion, which is a record number for us, and which also compares quite well with what we saw last year as a whole, where it was about 3.2 billion, and I think that's 1.28 is also in itself higher than what we saw in the whole of 2019. So that is from our perspective, one of the most important number to watch, because that indicate the pace at which we're able to grow our overall AUA. I think because we are not just a stockbroking firm, we are a wealth management platform, and stockbroking commissions typically only account for a minority of the percentage of our overall revenue. So I think for us, it's not quite meaningful to try and make put too much weight on trying to forecast the quarter-to-quarter trading volume. I think we have also shown in our numbers that typically when we have a certain AUA, then there's a certain net revenue that we are able to achieve. So the number that we saw last year and this year has been 0.75%. So if we think in terms of that number plus minus a bit, I think that, and then you make some assumption in terms of the net inflow, and therefore you are able to project the AUA, then that will probably be the best way to try to predict what to expect for the future.
Hi, Mr. Chairman. We have another question from a shareholder. His question is, having lost the bid for MAS license, can iFAST still play a meaningful role in Singapore digital banking environment?
Well, on an immediate basis, I suppose we are not able to directly participate in the digital banking itself. Even though I would say that part of the intention of going for the digital banking license is so that we can better plug into the overall, call it the foundation layer of the fintech sector in Singapore. There are still other ways of being able to progress further on that front, even before we have a digital banking license. So that's something that we continue to work on. There's some other services and so on that we are in the stage of working on. Eventually, at some point, if the chance arises again for digital banking license in Singapore or elsewhere, then we will pursue that accordingly as well.
We have another question from Royston. His question is, please find out the status of the Malaysian digital banking license. How much money does iFAST intend to commit, assuming it is successful in obtaining this license? May we find out about the timeline for the bidding of these licenses?
So, so this is similar to the question that we had earlier on from one of the audience here from the floor. So the closing date for the Malaysian digital banking license will be end of June this year. So iFAST is currently leading a consortium to work on putting in an application to Bank Negara in Malaysia. iFAST expects to take a stake of below 50%, but we expect to be the leading company, or the company leading the overall effort. As far as quantum of investment is concerned, if you think in terms of the requirement of minimum requirement of 100 million ringgit in terms of capital, but putting up some buffer. Let's say you double it to 200 million ringgit, and if iFAST take a stake of 40-50%, I think that can give a rough gauge in terms of what would be potentially the initial capital that is required. So at that kind of size, we are quite comfortable with being able to manage on that.
Okay. Next, we have a question from a UBS analyst. The question is, Hong Kong and Malaysia both took 5 to 7 years roughly to break even, i.e. PBT margin to turn positive, with 110 million Singapore dollars in China AUA this quarter versus 169 million in Malaysia, which is more advanced. Will the break even in China could be even faster than in Hong Kong or Malaysia?
Yeah, I suppose for China, it depends on at which point you come from. I think China is a market where if you get the right strategy, you get the right execution plan, and then you hit upon a certain breakthrough in terms of strategy, then it's foreseeable that you may come across a time where suddenly the numbers start to move up very fast. And then the time to turn a profit can actually be shorter than elsewhere. We are at the stage whereby we are not at the scale yet, but as I mentioned, I think we're encouraged by the fact that momentum has improved quite a bit in the last 1 year plus. We do intend to continue to build on this momentum, and we hope that in the course of next 1-2 years, we can see something a lot more exciting coming through from China. By the way, the China AUA is the correct number is not 110. It's actually a lot more than that. So 110 is probably that's an increase. 110 is an increase in AUA for China. I think we are probably at the level that is more like 380 million.
Yes, 300 plus mil, 1.9 billion RMB.
Yeah, 380 million Sing dollar in terms of China AUA. Next question.
Okay, next we have a question from Jefferies, analyst from Jefferies. His question is, can fund for accredited investor be offered to retail investor? Can this be a source of growth of AUA? Given the growth, can you give a sense how you are scaling up your compliance and onboarding systems?
I think a fund for accredited investors cannot be directly offered to retail investor because that's part of the regulation. Having said that, it is possible that that fund for accredited investors can be part of a certain portfolio, example, a fund portfolio, or part of a discretionary management portfolio, and that portfolio can be purchased into by a retail investor. So I think that's sort of roughly how the regulatory framework works. Can this be a source of growth of AUA? Yes, that is. Such funds can be a source of growth, even though, of course, for us, the bulk of it will be through a retail fund. Given growth, can you give a sense of how you're scaling up on compliance and onboarding system? Perhaps I would like our lead independent director to help with this question.
Well, certainly compliance, regulatory compliance, risk management, onboarding, know your customer. These are very important issues that we deal with all the time. We've been increasing our manpower strength in all these areas, improving the computer systems to do self-checking and building in controls that will flag all the issues automatically so that there will be less human error. So indeed, Given this growth, and congruent with the growth in business, compliance and onboarding will be beefed up.
Thank you. Next question.
So we'll move on to another question by Indra from CIMB. So her question is, net revenue in Hong Kong and China was flattish or improved Q on Q, but profit from both of this region decreased. Can you share what were the reason for this? Is it related to staff costs or marketing costs, etc.?
I think for Hong Kong, as we mentioned earlier, I think the increase in net revenue on a year-on-year basis wasn't ideal, partly because of the fact that interest rates dropped quite substantially. That decreased the net revenue growth for Hong Kong. In terms of the bottom line, I think in terms of quarterly numbers, typically there's some fluctuation here and there in terms of the cost. So I would say that that can actually help to explain why the profit wasn't really growing year on year for Hong Kong. But I wouldn't read that as a trend for going forward. As far as China is concerned, I think we had good growth, certainly, very strong growth on the revenue and the net revenue front. But cost in the meantime has also increased because, as we mentioned, we're at a stage where we feel that it's important for us to try to build on this momentum that we're seeing further. And that will allow us to achieve more exciting potential in the years ahead. So because of that, we find that even though revenue grew quite strongly, there was a slight increase in the losses for China. For this year, as we mentioned earlier, it is possible that losses in China could be a bit more than last year. And we will look towards the next 1-2 years and beyond to see improving trends on the profitability for China.
Okay, Andrea has a follow-up question regarding the China market losses widening. So she's asking whether we are expecting this to double year on year.
Do you mean doubling of losses? We are not expecting doubling of losses. The losses may increase a bit, but no, I don't think we'll double the losses.
Okay. Our next question is from point 72. The question is, for our target to achieve 100 billion AUA by 2028, can you share a bit more in terms of the different level of growth we expect in the various markets? What kind of market share do we see as a realistic target for iFAST?
I think, if we look at where we are today, even for our biggest market for Singapore, we are currently at 11 billion. 11 billion relative to the size of overall wealth management industry, we think that we still have a very small market share. Is it foreseeable for Singapore AUA to grow to 20-30 billion or more by 2028? I would say that if you look at size of market and if our execution are good, then it's a number that is achievable. Of course, as I said, subject to good execution. So if you are looking at that kind of a possible number for a market like Singapore, and then you look at individually Hong Kong, Malaysia, and China, then you actually start to realize that certainly the potential for achieving the 100 billion will actually be there. If you look at the size of the overall wealth management industry, then even 100 billion is a very tiny part of the market share of the overall market. So it's a bit difficult to pin down the exact market share because it's a small percentage anyway. More importantly is for our business model, we have the right level of service, right level of execution, and I think it's a number that is possible. I always quote the example of a platform in US, Charles Schwab, for instance. They have a AUA of $4 trillion. and the bulk of that comes from the US market. So you can see that if you're talking about 100 billion for the markets we're in Asia, then is not exactly that massive a number. Next question.
Okay, so we have one
Sorry.
last question that is in line. So this question is from a shareholder. So given the current status of the company, what are the weakest links and how you plan to address them?
I'd like to invite our lead independent director again, who is also the chair of the board risk committee, to perhaps tackle this question.
Let me give a very sincere reply, not necessarily addressing the question directly. Of course, weaknesses there will always be in any company. But I joined the board 7 years ago, and sincerely, I've been very impressed by the management team under the leadership of Chang Chung. The audit committee chair, Peter, myself, I chair the RISCOM. All the issues that the committees bring up have always been swiftly dealt with by management, followed up very rigorously, and where they cannot meet up with the expectations, they explain why, and we negotiate timelines for them to meet. And on their behalf, we also negotiate bigger budgets for them to work with. So I'm not answering the question directly, but I'm saying that whenever we come across weaknesses, the management has always responded well. And I myself, I've been very happy to serve on this board. And I'm happy to report to shareholders that the management is always doing a good job. Thank you.
Thanks, Matthias. Is there one final question from the audience on the floor here before we move on with the voting? Yeah, I think there isn't further questions. So I'd like to thank everybody for all the questions. We'll now move on. And yeah, for those that haven't cast your vote, for those that haven't cast your vote, you have a final 10 minutes to cast your vote. Please refer to the countdown timer on your screen for the deadline to cast your vote. So yeah, so we are right now at 9 minutes and 55 seconds. Please cast your votes accordingly.
How to cast your vote. Exit full screen mode to start submitting your vote. On the right side of the video screen, you should see the portion to cast your votes per resolution. Click on Next to see other resolutions and vote accordingly. Should you want to cancel your vote, simply click on Cancel Vote and vote again accordingly. That's how easy it is to cast your vote.
The results will be out in a short while.
Already.
Okay, I'm informed that the votes have been counted and verified. I now announce the results of the poll. Resolution 1, which is to receive and adopt the financial statement, we have 99.92% in favor. As such, I declare Resolution 1 carried. Resolution 2, to re-elect Mark Duncan as director, we have 100% in favor. As such, I declare Resolution 2 carried. Resolution 3, to re-elect David To as director. We have 100% in favor, as such I declare Resolution 3 carried. Resolution 4 to re-elect Janice Wu as director. We have 98.98% in favor. As such, I declare Resolution 4 carried. Resolution 5 to approve the final dividend. 100% in favor. As such, I declare Resolution 5 carried. Resolution 6 to approve the payment of directors' fees. 100% in favor. As such, I declare Resolution 6 carried. Resolution 7 to appoint KPMG to reappoint KPMG as auditors. 100% in favor. As such, I declare Resolution 7 carried. Resolution 8 is to authorize directors to issue shares. We have 98.3 million shares, representing 89.78% who voted in favor. 11 million shares, representing 10.22% voted against. As such, I declare Resolution 8 carried. Resolution 9 to approve the grant of options to myself. We have 91.49% who voted in favor, 8.5% who voted against. As such, I declare Resolution 9 carried. Resolution 10 to approve the proposed renewal of share buyback mandate. 100% voted in favor. As such, I declare Resolution 10 carried. Ladies and gentlemen, as there are no further items of ordinary or special business arising, and as no notice have been received by company to this effect, the business to be transacted at this annual general meeting is now concluded. I declare the annual general meeting closed. All attendees are reminded to remain seated and await instruction from staff before leaving your seats. On behalf of the Board of Directors, I'd like to thank you for your attendance at this AGM. Thank you, everyone.